Here is the U.S. market summary from Monday, July 21st, 2025. The stock market ended Monday with a mixed performance. The S&P 500 crossed the 5,300 mark for the first time in history, but gave up most of its gains later in the session, following Fitch's downgrade of the industrial sector outlook and the release of weaker-than-expected economic data. The Nasdaq Composite extended its record-setting rally, whereas the Dow Jones Industrial Average and the Russell 2000 closed modestly lower. The primary catalyst for the market this week is the anticipation surrounding the corporate earnings season. According to FactSet, over 85% of the S&P 500 companies that have reported so far have surpassed earnings per share estimates. A significant divergence in performance is expected. The Magnificent Seven companies are anticipated to report an average earnings growth of 14%, whereas the remaining S&P 500 companies are projected to post a more modest average growth of 3.4%. Turning to individual stocks, there were several notable movers. Verizon shares surged 4% after the company reported second-quarter earnings that exceeded market expectations and subsequently raised its full-year guidance. Meanwhile, ahead of its earnings announcement, Alphabet continued to receive positive assessments from Wall Street, with both Evercore ISI and Morgan Stanley setting a price target of $205. In contrast, Tesla's stock closed slightly lower, reflecting investor concerns over recent sales slowdowns in the United States and Europe. Microsoft recovered from intraday losses to close flat, shaking off earlier reports of a security flaw in its SharePoint server. Finally, Rocket Lab experienced significant volatility. Its stock initially rose on speculation that it might replace a SpaceX contract, but later plummeted after news confirmed the existing agreement would be maintained. On the economic front, the Conference Board's leading economic index for June fell by 0.3%, coming in below expectations and reigniting concerns of a potential economic slowdown. This was compounded when credit rating agency Fitch downgraded its outlook for 25% of U.S. industries to worsening, which dampened investor sentiment. Correspondingly, the Fear and Greed Index retreated from extreme greed to the greed level. Regarding international and policy factors, market movements were influenced by Japan's upper house election over the weekend. The ruling coalition's failure to secure a supermajority while avoiding a major defeat led to a strengthening of the Japanese yen and a decline in Japanese government bond yields. U.S. Treasury yields fell in tandem and the U.S. dollar showed a weakening trend. Trade policy remains a key focus. Commerce Secretary Howard Lutnick stated that the August 1st deadline for tariffs is firm, but noted that the door for negotiations remains open thereafter. A White House spokesperson indicated that President Trump might announce additional tariff-related measures, while Treasury Secretary Bessent asserted the importance of a high-quality agreement, asserting that there would be no rush deal. On a sector basis, communication services and materials showed strength, while energy and industrials declined. The technology, utilities, and consumer stable sectors posted modest gains. In contrast, the healthcare and financial sectors finished slightly lower. Technology stocks in particular continued to attract investor interest due to strong earnings expectations and stable profit structures. Finally, Wall Street experts offered several interpretations of the current market. UBS noted the possibility of a short-term correction, but believes the underlying bull market trend remains intact. Goldman Sachs provided analysis on the macroeconomic front, suggesting that a weaker U.S. dollar would partially cushion the economic impact of tariffs. Echoing a bullish sentiment on specific sectors, Treasury partners argue that high-valuation technology stocks are still justified by their strong cash flows and high profit margins. And looking ahead, Miller Tabak emphasized that corporate forward guidance will be the most critical metric for investors to watch this earnings season.